Hey everyone. SoFi Technologies is one of the fastest growing financial services companies in the US. The company is attracting millions of new customers because of its innovative app, its attractive website, and a robust yield offering for checking accounts that's making people say, why should I leave my checking account at Bank of America or Wells Fargo, which is offering me 0% on my deposit, where I can move it to SoFi, which offers me 3, 4, closer to 5% at times in 2023. So that's attracted customer deposits. But what about the stock price? That's the question I'm going to discuss in this video. I'm going to answer where I think SoFi's stock price could be 1 year from now at the end of 2024. So let's jump right in. Let's look at the assumptions and estimates I will be using to make this prediction. And then you can see for yourself and determine whether or not my prediction is too optimistic, too pessimistic, or maybe it's right on line. Let's check it out.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So as of this recording, SoFi stock price is trading at $10.28 per share. That's down from the high of around $25 per share around January of 2021. But it's up from the beginning of January of 2023, where it was closer to $6 per share. So one of the estimates that I will be using for SoFi is its revenue for 2024, which ends December 2024 for SoFi. It's not one of those companies that has a different fiscal year compared to its actual calendar year. Analysts expect SoFi to generate 2.54 billion in revenue in 2024. It's also important to look at what analysts estimate for 2025, which is 3.01 billion in revenue for 2025 for SoFi. Additionally, I will be using SoFi's price to sales forward ratio, which is 3.914 as of this recording, and SoFi's price to sales ratio, which is 4.894. You might be thinking, wait a minute, didn't I just do the same thing twice? The answer is no. This is the price to sales ratio. It measures the market price against sales over the previous 12 months. Okay? The forward price to sales ratio measures the market price against what is expected over the next 12 months. So one valuation looks at the previous 12 months, the other one looks at the next 12 months. So you can look at only one of them, but I think it's more informative to consider both of them, right? It provides you more information. And in my estimate for where I think SoFi stock price could be at the end of 2024, I'm going to incorporate both of these so that we get a more comprehensive look into where SoFi stock could be. Okay. So now let's go into my valuation prediction. Okay, so you'll notice some familiar figures in this estimate. All right, let's start with the left-hand side over here. Let me draw your attention to total revenue, 2024 estimate, 2.54 billion. This is the number I got from the analyst estimates, okay? Also 3.01 billion for 2025 estimate. I also got that number from the analyst consensus estimate, okay? This figure, 951,183,107 diluted shares outstanding, I got directly from SoFi's latest quarterly financial statements. This is provided by SoFi. Now, for my price prediction, I'm going to assume the share count stays the same, which is a friendly estimate to SoFi's stock price. Okay, I want to highlight that because SoFi has diluted shareholders significantly over the last few years. And it's most likely that SoFi will continue diluting shareholders over the next year as well. But I'm not going to include that in the valuation. I'm just going to assume the diluted shares outstanding stays the same because it's difficult to predict just how much new shares SoFi will add. So let's just assume that stays the same. But I want you to keep in mind that's a friendly estimate, which is going to make SoFi's stock price estimate higher than it would be if I was to include more shareholder dilution. Okay. So now when we take the total revenue divided by the diluted shares outstanding, we get the sales per share, which gives you $2.67 sales per share in 2024 and $3.16 sales per share for 2025. Okay, so now that we've got that side of the diagram looked at, let's go over to this side now. So this $2.67 sales per share I got directly from this estimate here. Okay, and the same thing for the 2025. Okay, then I have here the price to sales ratio. 4.9 is what SoFi is currently trading at. Okay, so if nothing else changes with its price to sales ratio, if investors are willing to say pay the same price to sales ratio as they are now at the end of 2024, SoFi's stock price is estimated to be $13.08. Now that would be considerably higher than the $10.28 it's trading at now. It would almost be a 30% increase in 1 year. I would be happy with those gains if I was a SoFi stock shareholder, which I am not. I do not own SoFi shares, but if I did, I would be happy with these gains. Now, what if investors are more optimistic about SoFi and they're willing to pay a price to sales of 6? That would mean the stock price would increase to $16.02. That would be a 60% increase in 1 year. That would be excellent. What about 7? If investors are really excited about SoFi, let's say SoFi increases profitability, and as student loan repayments resume, that creates a boom in demand for refinancing with SoFi, and that creates optimism around the stock, and valuation increases to 7 price to sales. That would increase SoFi's stock price to $18.69. That would be an 80% increase in 1 year. Okay. But what about the negative side? Because it's not all good news, right? What if something goes wrong and investors are only willing to pay a price to sales of 3 instead of 4.9? Well, then that would decrease SoFi's stock price to $8.01 in 2024, which would not be a disaster, right? That would be a 20% decline from where it's at right now. Of course, SoFi stock investors would not be happy with that, but it wouldn't be a disaster. SoFi stock investors have seen the stock price fall by more than that. So even in that case, it wouldn't be such bad news. But that's not the worst case scenario by any means. That's not the worst case scenario. Don't take that and say, well, in the worst case scenario, it's only going to go down 20%. That's not what's happening here. Just in my assumptions, that's the worst one out of all of the assumptions I used here. I could have used lower estimates, which would have been worst case scenario, and you would have gotten a lower valuation. All right, so, but what about if we're going to value SoFi not based on price to sales, but the forward price to sales? All right, so if we're going to judge forward price to sales, we need the revenue estimate for 2025, which we got already, $3.16. And if we keep the same price to sales forward ratio at 3.9, SoFi stock price could be $12.32, a nice 20% increase or 23% increase. But again, what if the scenario is better and investors more excited and they want to pay a price to sales forward of 5? That could increase SoFi stock price to $15.80, a 58% increase. And at 6, it would be $18.96, which would be a 89% increase. But on the lower end, if it was the price to sales was to fall to 2.5, that would decrease the stock price to $7.90. Again, only a 20% decrease. But should we look at a worst case scenario? Let's do it while we're here. Let's lower this. What if the price to sales in the worst case scenario, let's say it falls by 2/3 to 1.3? That could decrease the stock price to $4.11. That would be a steeper drop, a 60% drop. And what about just in the regular price to sales? What if we drop that from 4.9 to 1.5? 5. That could also decrease the stock price to $4. So now you might be thinking, well, what determines the price to sales ratio? That's entirely due to investor optimism or pessimism about SoFi. And that changes based on the characteristics of SoFi's business. One of the things I've talked about in 2023 is SoFi has made a significantly larger portion of personal loans versus student loans or home loans or car loans. Investors would be willing to pay a lower price for a company that does that. If in 2024 SoFi makes more student loans, more home loans because of its acquisition, it just bought a home mortgage company, right? If it makes a greater proportion of student loans and home loans, investors would be willing to pay a higher price for SoFi in that scenario because it's less risky. Home loans and student loans are less risky than personal loans. So when a business is less risky, investors are willing to pay a higher price to sales ratio. Okay, that's just one of the factors that goes into what investors are willing to pay in terms of the price to sales ratio. Now, if you're asking me where I think SoFi's stock price would be out of all of these scenarios, I always like to assume that the price to sales, when it's at the level it is right now, like if I go back to the charts, you can see it's about average where it's been over the last 3 years. And then we go back here, it's on the lower end of where it's been here. So I would say it's safe to assume that the price to sales ratio forward and backward looking stays the same because they're not too elevated. And so I would say my estimate would be somewhere, the stock price could be somewhere between $11 per share and $13 per share in 2024, at the end of 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.